On to the Meaty Money Show, we make sure that we just don't talk about investing in mutual funds, but also help you meet the brain behind these funds. And in this week's Your Fund Manager segment, we have on board Sumit Shukla, who is the MD and CEO of Axis Pension Fund. Let's understand what exactly this fund is and how it is performing, especially given the fact that it is a recently listed fund, listed back in 2022. And should you invest in this particular fund? Let's answer all these questions with Sumit Shukla. Sumit, welcome to the ET Money Show, and thank you so much for joining us today on ET Now. Firstly, when it comes to the pension fund, we would like to know your understanding and your advice to all of viewers out there that why should they really look at the pension fund, why it is actually beneficial for them, and also at what age they should start planning for their retirement, and in order to reap the benefits, what is the ideal age as per you to start for this?
So thanks to ET Now and you for giving me this opportunity to come and talk about pension and retirement overall. So as they say in savings, and particularly saving for retirement, you have to start very early. The earlier that you start, you will have that much of an happy retirement or the larger amount of pension you will get. So as one starts working, ideal is that they should start contributing some money to the national pension scheme and save for their retirement. Because ironically, what happens is you work for everybody joins work at about 25 years of age and works till 60. So that is about 35 years of working. But post 60, you have to live for another 30 years because people are not going to die so fast that you have to take care of your retirement needs when you're not going to have a steady income. So that is very important that you should start saving early and keep on contributing to build your pension corpus, which is large enough. And National Pension Scheme is the vehicle which is a product of the Government of India, and it is tailor-made for people who want to save for retirement. It is the safest place to save for retirement at this point of time. And one has to realize that the NPS as a product is used by particularly by government employees. It's mandatory for state and central government employees. So the government has created a product which is used by its own employees, which is a large base of employees. So it has to be one of the safest from a risk angle and from return angle also. So one has to start early and save as much as possible. But needless to say, if you have not saved and you are already reached 35, 40, you should look at a decent amount of sum. And there are calculators which are there on our website and other pension funds website. One can calculate and see as to how much corpus a person needs and what is the pension that they will need. But one has to start quickly. One has to start through National Pension Scheme, and that's the best vehicle to save for your retirement.
Talking about your pension fund specifically in this particular space, you guys are a bit new in terms of getting this fund. Back in October 2022, you got this, and now as I know that your AUM is 223 crores. So tell us about how do you plan the investments, because we know that there are mandates with respect to from the government itself, like you were just mentioning, that it is a product that is being designed by the government, that you have restriction in terms of investing, in terms of the large cap, how you are investing in debt and equity bifurcation. But for your fund, how do you guys plan it, and what is the basic feel or the basic vision in terms of the returns that you wish to give to all your investors? And also tell us in terms of the AUM from 223 crores, what is the next target that you guys have for you?
So basically, the entire product is regulated by a regulator, which is Pension Fund Regulatory Development Authority, PFRD, which is a separate regulator. Particularly, investments are regulated by NPS Trust, which is a centralized body which looks after all the investments that happen. Very important from a subscriber perspective, because somebody has to keep a close watch on how this money is getting invested. And that is where PFRD and NPS Trust are doing a very good job in making sure that investments are in the right place and money is protected from a customer perspective. If you look at where do we do our investments, we have 4 schemes. E is the equity scheme. We are only allowed to invest in top 200 companies in India. That makes us largely a large cap oriented fund. But we are only allowed top 200 companies according to the market cap. And that too, there is a quite a diligent exercise that we do to choose out of those 200 stocks to invest in equity. On the corporate and the government debt side, particularly in the corporate debt side, nothing less than AAA rated is put in the debt, and it is everything is made sure that it is the best in class from a risk angle, from a investment angle, that the debt is also put in. So whether it is corporate debt or government debt, it is completely safe. And then we have the alternative investment fund, where the subscriber can put money, where we put investments into REITs and InvITs to make sure. Now, the philosophy behind a pension fund or a retirement planning is, from a pension fund manager perspective, is that we have to look at the long term. Particularly when a person is investing in a pension fund, we can predict as to when he's going to retire, and we can actually look at it at a portfolio from an aging perspective and take a call on investment, whether in equity or government debt or corporate debt, from a long-term perspective, and invest in those assets which are going to yield returns in the long term. And that is the reason why what you will see is our returns are superior to a mutual fund or a life insurance, because we hold it for longer term, and we are, we can pass through many cycles before a stock or a debt has to go through. So from a perspective, it is long term investment in solid companies, making sure that when the person is retiring, there is no shock waiting for him. As he retires, he should be having an happy retirement. And that from that perspective, it is very important that you look at all the risk angles and making sure that the ratings and everything, or how the financials are, and you're choosing the right stock, and it is getting continuously overviewed. It is reviewed regularly, quarterly, by our boards, respected board of our companies, plus the NPS Trust, plus the PFRDA. They all review the portfolio and give suggestions and advice into what changes it has to be done. So particularly from a subscriber perspective, they have to be rest assured that their money is at the right place, a long-term view is taken, and the investments are done accordingly. If you see internationally also, and we keep on reading articles where we see Canadian pension fund and Norwegian pension funds are buying assets in India. So largely pension funds worldwide also are looking at long-term assets to create wealth for their subscribers. And same is true for India also. That is where the idea is of making an investment in these things. Particularly for Axis Pension, our aim is to be best in class on the investment side, to provide superior returns, making sure Axis as a group is a one-stop shop from a retirement perspective. Anybody who walks into a branch as a customer gets the right advice on retirement, becomes our customer, and we handhold him till the time his investment is managed by us. And after his retirement, how his money is going to be invested, how is it going to be taken care of. So end to end, everything is within the Axis Group family now. We are also the trustee bank. Axis Bank is the only trustee bank within the NPS architecture. So we are creating a one-stop shop of retirement within Axis, and that shows our sharp focus on customer segments. So we have created it as a separate segment, and we look at retirement or retirement planning as a segment which we are attacking from all sides and trying to build a big business. Vis-a-vis numbers, we want to be about 50,000 crores in 5 years. That's the target we have set ourselves. The first target is to be by FY28, 50,000 crores of AUM. And that's what the agenda is that we are driving now.
Okay, thank you so much, Sumit, for putting in perspective that how do you guys plan the investments, what are the regulations, and what is the target on AUM. But since this pension fund investing is a long-term investing, is like you highlighted, but since the start of your fund back in October 2022, the journey has been in terms of NAV, if you can just highlight this for our viewers, and going ahead, what is your expectation, because most of your exposure is in the large cap space. So going ahead, what outlook do you hold with respect to the performance of the large cap names, especially for 2023?
So as we got into this business in October 22, we took a conscious call of going into a passive strategy because our portfolio was quite small. So for the first 4, 5, 6 months, we were in a passive strategy, looking at only top 50 stocks, and that is where our investments were. As we have grown in size post 1st of January, we have started picking up equity opportunities outside of the top 50 stocks, and we have now a universe of about 80 stocks where we are investing, and we keep on increasing that universe. As we build our portfolio, we are making sure that our equity universe keeps on increasing and our debt universe also keeps on increasing. We have a solid team of investment led by a tenured CIO. And the idea is we invest money, and as an Access Group, we want to put money on our investment team, from research, from fund manager to the CIO, so that we have the best brains working behind in getting the right customer, the right investment. And that is where the agenda is being driven today. As I look at returns, particularly from an investment point of view, if you look at retirement or pension funds, one has to look at returns in the long term. And as I said, we are into assets, and our ideology is to look at the long-term investment cycle, because we can predict there is no pressure of redemption which comes from a pension fund perspective, because we know people have invested at 35 age, 40 age, and I can predict when they're going to take out the money. So from a long-term perspective, one has to look at returns, and all our fund managers are giving very good returns, and we are all, some of the funds have been there in the existence for a long time. But all of them are doing a very good job, and on an overall basis, whether it's equity or debt, the fund performance is superior. And same is going to be true for Axis. We want to be in the top quartile, make sure that our risk is taken care of. We put the right money at the right places and give superior returns. So we track it against mutual fund and other industries also. But important from a subscriber perspective, one should look at the long term whenever you are comparing for a pension return. Short term is not what one should look at. And in the long term, I can assure you superior returns will be delivered for the kind of investment philosophy we all are driving, and particularly in Access, what we are trying to achieve.
Absolutely, Sumit. But whenever somebody is looking for investments in the mutual funds, one other area that they are concerned about is the expense ratio. Tell us, or help us understand rather, how is the expense ratio difference between the traditional mutual fund and the pension mutual fund? Because your pension mutual fund is very well regulated in terms of the investments, as well as there is a limit onto the expense ratio that can be charged. So tell us, what is the comparison looking like, and also at Axis Mutual Fund, any average number that you can tell our viewers that this much is the expense ratio, if you can shed some light over here.
So basically, what happens is in pension fund, it's a very good question. People don't look at cost, but if you look at the pension fund charges that we levy to the customer, and which you can call it as a TER in the mutual fund space. So I would not like to comment on what it is in the mutual fund space, but I will talk about the pension funds. So our total expense ratio as a fund manager, it starts with 9 basis points and goes down to 5 basis points. If you compare it with any other mutual fund or life insurance, this will be 1/20th or 1/30th of what they charge. So if you put your money 100 rupees here, 99.9 rupees will be getting invested. Only 10 basis points at an average would be 5 basis point to 10 basis point is going to get deducted. So that really impacts the portfolio in the long term. As I said, that if you have to look at the long term investment in a pension fund, and this deduction in the TER happens out of your AUM. So the money that you gets out of your entire AUM is very, very small. And as you look at the long term and you start looking at your portfolio, you will see the value of lesser TER in pension fund impacting your portfolio than a higher TER. So on a blended basis, this is not going to be more than 5 to 6 basis point, whatever cost. And if you look at it, why government created this vehicle of NPS? It was basically to provide a low cost vehicle for people to save for their retirement. The ideology was to go low cost. They had a disintegrated structure, and that's the structure that they have come out with. So we are a fund manager. Our entire sales process runs through POPs, which are called the point of presence. And so when you open an NPS account, you are charged 400 rupees. Plus you have to pay 0.5 on the contribution, not on the AUM, for your money that gets invested. And when I manage your fund as a pension fund manager, I manage it between 5 basis points to 9 basis points. So in totality, the charges are very low. Even to manage your account, or your change of address, or anything that you want to do with your account, the charges are minimal. So a product which is, I think, if you look at an OECD study, with the OECD studies all the financial products across the world, it was rated as the most cost-effective product in the world, and I think it continues to hold that space, that it is the most cost-effective product in the world. At the same time, what happens is the fallout is, since we don't make that large amount of money as pension fund managers, the subscriber or the customers benefit from it, but we don't get the monies to spend on marketing or doing sales in the way that other people are able to do. So the pitfall is that it's a great product for the customer. It is not such a great product for the distributor because they don't make that much money, or for the manufacturer in that case. But considering that for the subscriber or the customer, it's a no-brainer that everybody in India should have a NPS account. If you have not opened it, please open it. It's an online seamless journey that you can open it in 5 minutes, 10 minutes. You can go to our website on Axis Pension Fund, or you can go to the Axis Bank website, open your account and start saving today. You will laugh away. But I have customers who have been with us for so many years. I only get happy messages from them whenever they see their corpus, how it has grown. So come on to it, enjoy the benefits. The tax benefits are also very superior. The tax benefits, even in the new tax regime, the tax benefit of a salaried customer is there. So end to end, everything is available in the product. Please open an account and start saving for your retirement.
Okay, that's an interesting point you highlighted, and some of the pain points for the industry as well, why you guys don't go big onto the promotion side. But Sumit, like you were mentioning that the expense ratio is very low, so definitely it's a very good for the consumers in terms of compounding their wealth over the years. The multiplier effect could be really amazing. But tell us, what is the minimum amount that they can start with this NPS scheme? And you were also mentioning that the process is really simple. So somebody looking at the show right now, help him understand that how he can actually go and start this NPS scheme. What is the process looking like? How simple it is, and onto the tax benefit, how they can be benefited due to this.
The entire process of buying is completely digital. If you have an Aadhaar, you have to just through the Aadhaar, you can open an account in 10 minutes. It is a unique account. It is like a unique account, like you have a PAN number. You will get a permanent retirement account number. That account number is valid to you throughout your life. So once you open an account, put your Aadhaar number, and you will have to choose where you want to put your money. Options are equity, corporate debt, government debt, and alternative fund. You decide your fund manager. Once you decide your fund manager and your fund, that the account will get opened. You can do systematic investment plan. You can do a lump sum. You can do whatever way you want to invest. Money will keep on accumulating in your PRAN number or your account, and you will keep on getting alerts from the CRA or the person, the people who are managing the back end. You will continue to get serviced by them. Completely digital from an account. Once the account gets opened, you get a PRAN kit. You will have access to your online account. You can look at your account. You can manage your account completely. You can do that. So that is there. From a tax benefit perspective, if you are working in any company or a corporate, 10% of your basic salary is completely tax-free under a separate section, not covered under ATC. So you have to talk to your HR. Make sure you open your NPS account, send your HR the account number. They will deduct 10% of your basic salary and contribute to your NPS account. And every month, like your PF deduction, your NPS deduction will continue to go to your account number and will keep on accumulating. If you change jobs, the corporate here will stop. The corporate way you're joining will continue to contribute. Even you stop working and you want to continue with the account will continue to be there. The investment will continue to be there. At the same time, there is a separate 50,000 rupee tax benefit, which is under Section 80C, which is over and above 1.5 lakhs, which a customer can avail and take that benefit. So basically 10% of your basic plus 50,000 rupees is completely tax-free that you can put in your account. You can do it. You can start your account with 500 rupees, 1,000 rupees, and then start contribution. There is no limitation that you have to start with 10,000 rupees, 20,000 rupees. You can start with 1,000 rupees and your account is established. You can go to your bank account. Each and every bank today has a facility where you can pay your NPS payment through your bank account. You can link it and at the same time put frequency in your SI, systematic investment, and the money can keep on accumulating in your NPS account. So once you get onto it, particularly for the Gen X, the apps or the applications that are there with the CRA, which is K FinTech and NSDL, is outstanding. You can see your investment there on the app. you and at the same time manage your investment and completely be safe. It's not like EPFO. You are not it's not that it's not accessible. Very easy to access. You don't have to be worried about anything,
Sure.
and completely transparent.
Okay, okay. Thank you so much for simplifying the whole process, Sumit. With this, we'll let you go on that. And thank you so much for joining us today on ET Now and helping all our viewers, helping them to meet their fund manager, as well as helping them understand that what NPS means and how they can actually go ahead investing in this particular scheme. But with this, viewers, it's time to slip into a short break onto the Money Show right now. But don't go anywhere. A very interesting discussion onto the ideal holding period of your mutual fund. We'll be carrying the discussion ahead with another guest, Mr. Firoz Aziz of Anand Rathi will be joining us shortly. Stay tuned.
Co-powered by Bandhan Mutual Fund.